Morning, Chair. Just the following apologies. Apology from the Minister of Mineral Resources and Energy, who's attending the Energy Indaba, and then the Deputy Minister, who is currently abroad, Chair. We haven't received any apologies from any of the members, Chair. So those are the apologies, Chair. Thank you.
Okay. Can we, let me see one. Can we then see whether the agenda are programmed for today? I'm trying to, oh yeah. Yes, honorable members, we are dealing with the briefing by SAF on their first, second, and third quarterly reports. And then, yeah, that's all that we're having today. Can we put correspondence, Aaron, especially the one of, this may not be here from Makua Amoa. I think if it need be, just put it, and then my request will be we allow members to go and familiarize themselves with that correspondence, as well as probably in the next meeting then be able to guide and help us on how to take the process forward. Okay, being the case as it may, can I now give, you will bear with me, Self-Chair, in the event I forgot someone from the department, especially the executive, at an executive level. Can I give to the chair of SAF? Mamino.
Honorable Chair and honorable members, I would like to first greet all of you this morning and thank you for the opportunity that you have allowed us to present this morning. I do see a colleague, Mr. Ganta from the department, he is here, but as you know, today is the start of the Africa Energy Indaba, and the minister is going to be opening the session, and I would think that some of the GMRE colleagues may be there. But be that as it may, again, I would like to be thankful and show appreciation for being allowed to present today quarter 1, 2, and 3 performance for the SAF group of companies. Maybe just 1 or 2 things before I hand over to Mr. Moahi, who's going to be leading the SAF delegation in terms of the executives for the presentation of the quarter 1, 2, and 3 performance. The first thing I just wanted to do is to introduce our new chairs in particular. We've got a new chairman of SFF, Strategic Fuel Fund, Mr. Mkize. We also have a new chairman for PASA board, Chair Rupa. Of course, we still have Chair Boya that you are familiar with, who is accountable for the Petro SA board. We also have Chair Swanepoel, who is responsible for AEMFC. And last but not least, we've got Ms. Sondlo, who is chairing the iGas board. Chair, at this point, I'm not sure if all of the chairs are here. Again, as I said, there is a challenge with the Africa Indaba, Energy Indaba, which is taking place today because some of our colleagues are also presenting there. As far as the board is concerned on the oversight, I do want to confirm that on a quarterly basis, We do provide oversight activities, looking at the quarterly performance of all the companies under the SEF banner. We meet on a quarterly basis to do dialogue on the performance of the group and also on the performance of the subsidiaries, just to make sure that everyone is delivering according to what is expected and what is compacted. We also, from my office, make sure that we have engagements directly with the chairs and also with the CEOs to make sure that any performance that is lagging has corrective actions in place and that those corrective actions are taken into implementation phase. We also do extend our oversight into a more hands-on role, especially when we see that the situation of a subsidiary is really dire. We even go to an extent of having war rooms where we can actually provide even more strengthened oversight in terms of just having weekly meetings and also going to the ground to see how we can support management. So that really is said to just give you the comfort that from a board point of view, we do exercise our oversight role and we strengthen where it is necessary. Honorable Chair and honorable members, as I've already said, Mr. Moagi is leading the delegation of the executives. He's going to be assisted by the executives to take us through the performance report that you're going to be seeing today. And at this point, I would like to hand over to him so that he can do that. And I think the presentation is already on the screen. Thank you very much, Honorable Chair and honorable members. I'm handing over now to Mr. Moagi. Thank you.
Thank you very much, Chair. Honorable Chair and honorable members, thank you very much for giving us an opportunity to present our performance, year to date up to the end of Q3. Chair, I've got the whole SEF group executives and CEOs on the line, and will actually be taking the presentation, quarter by quarter. And I've requested that I'll do the first quarter. Dr. Masangane, CEO of PASA, will do the second quarter. The Petro SA CEO, Madam Ngamani, will do the third quarter. We will ask Dr. Mukoka to come in and actually talk more around the business development and growth projects. CFO will come through and actually drill into the numbers so that we actually can demonstrate where the challenges are. We will then ask Head of Human Capital to come through. We'll talk to the risk by CEO of AE, and then I'll come at the end to actually close the presentation before we take questions from the members. So Chair, Mr. Makanya will drive the presentation from his side, and we'll all actually just be using the same screen. Thank you, Chair. Objective of this presentation will provide an overview of the SEF Group business performance for Q1 to 3, year 22-23, both financial and non-financial. We'll actually go deeper into individual performance of each subsidiary. We'll discuss various strategic implications. The group, both short-term and medium, will talk also around the impact of European conflict. We'll provide high-level status update on key projects, just what is done, what is not done, and where we're going from there. And we'll also talk to risks and mitigation, and then we'll talk about key priority areas. Chair, in terms of just how we look at the rating, will now one, which is a red, it means it's unacceptable performance. 2, it means we below target. normally would say we still have a chance to recover. I know that we are actually nearing the end of the financial year. So some of those issues will come through in the fourth quarter. We rate our 3 as hitting performance, and 4 exceeding, and 5 you can almost say we walk on water. In terms of the first quarter, that looks like a very busy slide, but I'll just quickly unpack it so that we'll use the same presentation just to make it easier as we go along. Chair, the revenue, we actually had planned to hit 8.3. We have actually achieved 4.2. The net profit after tax, we had thought at this stage will be negative 207 million. We are actually, at 384 million worse than planned. But the impact there is OPEX. Our OPEX, we had planned to achieve 866. We have achieved 914. And the bigger impact there is once-off cost, which mostly are related to, PetroSA, VSPs, and the IGES once-off cost related to the acquisition of ROMCO. So at high level, those are the numbers, Chair. We actually, if you look at the cash, we actually generated more cash than we had anticipated. And that's purely because we've got money in the bank, and also part of it is environmental, which is the exchange rate. So, Chair, we're reporting a loss of 384 million in the first quarter of the financial year. And if you look at our business performance, key performance indicators, 10 has not been achieved in the first quarter. And I believe as we move forward, we have recovered from that. 3 below target, and on target, we've got 4 KPIs, and 2 above target, and 6, we believe we are at exceptional performance. And the net profit, which is basically one of the key numbers that we look at in terms of performance, SEF, you'll see is green, and IGES, SFF, and PASA. And the one area where we are in the red is African exploration. And Chair, we have done a lot of work to actually help both African exploration and PetroSA to recover. And the SEF group with the department on a weekly basis, we've got what we call a war room, which is actually meant to work across the piece in collaboration with the departments to make sure that we deliver on our performance and we get PetroSA out of the intensive care. And we believe we're making progress, although it's slow, Chair. Just the SEF group generated below expected profit, and also in terms of the gross profit, we were lower than we had anticipated. And as I said, we overspent a bit of money, and mostly on the ROMCO acquisition. Initially, we had actually thought that those costs will be capitalized, but we had to take them as OPEX, hence the impact on our OPEX line in our performance. And obviously, Chair, the interest help us a bit because of the foreign currency and the exchange rate gain. But some of the monies, especially in SFF, we keep them in dollar-denominated account as we earn those revenues. Next slide, please. Chair, in the first quarter, the key trends in the operating environment, global and regional, I will not go through each one of them. But in terms of global geopolitics, firstly, as the COVID was beginning to slow down and hoping that the economy is opening up, then the Russian-Ukraine conflict started, and actually that drove the oil price to as high as $148 per barrel. But it kept on cooling off, and at this stage, it's just above 80. But that had a big impact on our business. And the global commodity prices, obviously, we had seen the oil price go into $100 per barrel, which was 42% above what we had anticipated at the time of doing our plan. Obviously, Chair, the China impact, especially with the hard lockdown that they insisted on, slow down the economy and the consumption of the commodities, and that had impact on our business. And obviously the US tensions with China impacted on that. When you look at the domestic regional impact, obviously the slowdown in the economic growth, that impacted on the business. We saw the inflation actually creeping up significantly in the first quarter, and even into the second quarter, that was still impacting on our business. GDP growth, we spoke about that. And the exchange rate, obviously our business is very much exposed to the exchange rate. And we saw the exchange rate moving to 17 rand to $1. And that, if you've got cash in dollars, is good for the business. But we know that being in oil and gas, the biggest impact is actually the exchange rate on our business, both in acquisition of barrels, and supplying them in rand dollars. So that exchange rate is obviously a risk to our business. And the biggest one, Chair, locally, we saw closure of refineries. We used to refine close to 600,000 barrels per day. And today, we've got only 2 refineries running, which are actually just giving us a number just a bit north of 200,000 barrels per day. So those factors actually impacted on our business significantly. And we actually had to find self-help to actually look at what can we do to help our business going forward. The impact on SAF, Chair, we are in a steeply backwardated market, and the impact of that is the fact that businesses like SFF, which is actually making the chunk of their revenue from storage position, especially of crude, is not earning the revenue that it should be earning. So our business is very much dependent on what the oil price is doing. And currently, the market feels that the oil price is too high, and the future oil price will cool off a bit. And that actually have impact on our business because we can't store a lot of product in storage. We will probably get a lot of inquiries, but that does not take us any further. Obviously, the inflation and the interest rates impacted on our business as well. Chair, finished product supply, and requirements for premiums to be paid to land the product in our shores. And that is also still related to one, the tight supply in the market, but also the fact that the exchange rate is impacting on our business. So we had planned as Petro SA to hit the volume of 3.5 billion liters. And when the economy slows down, acquisition of product becomes more expensive. That actually impacted on our business. And we started struggling to actually get closer to that number of 3.5 billion liters. And of course, Chair, the increase of exports to Europe of coal, we have seen a shift in the usage of cleaner energy versus what people call dirty energy, coal and oil. And we have seen, as a result of this conflict in Europe, a lot of product, a lot of our coal from our shores being exported to Europe. And some European countries actually going into usage of coal to power their country. Impact of weakening of rand, and obviously the opportunities for stranded assets or highly geared assets. Next slide, please. Next slide. Thank you very much, Mr. Makhanya. Chair, when we look at individual subsidiaries performance for the first quarter, SAF reported a net profit of 5.2 million, which is higher than budgeted net loss. We had actually anticipated that we would have hit the net loss of 79 million. So the first quarter performance was positive. AE total revenue of 117 million, trailing by 104. As we said, AE was actually struggling a bit in the first quarter. I guess positive results, the net profit of 13.1 million. The PASA in the first quarter, operating profit of the under review was 6.7 million. We'll know that PASA does not generate massive revenue, but actually I think what they tend to do is to be pretty tight in terms of their cost to make sure that they continue to be positive how they operate. SFF reported a net profit of 159 million, and Chair, the biggest contributor to that was actually the exchange rate gain as a result of the weakening of a rand. And Petro SA to date, the net loss of 529 million, and which was, as I said earlier on, we could not hit the volume that we had anticipated. And the loss that we had anticipated was 10 million, but we ended up with the result, which was worse than what we had anticipated. And I think, one of the biggest contribution from both the department, our shareholders, SAF, and subsidiary participation is actually making sure that the war room sits on a weekly basis to drive performance and review where Petro SA is, and make sure that, it does not collapse. We continue to drive it in the positive direction. Next slide, please. Chair, at this stage, through you, I'll call in Dr. Masangani to take us through quarter two, and after that, Madam Nemani would take us through quarter three, and at that point, Chair will pause and see if there are questions from members, or we should finish the presentation. We'll take direction from you, Chair. Dr. Masangani, please. Thank you, Chair.
Thank you very much, Mr. Moagi. Good morning, honorable members, honorable Chair, members of the committee, group chairperson. I'll just quickly go through the Q2 performance. As you can see on the dashboard, our revenue, starting on the top left corner there, our revenue was actually much lower than the budget we had. We had total revenue of 12.6 billion versus our budget of 13.8. And the net profit after tax is much better than we budgeted, even though it is still a loss of 157 million. Our OPEX numbers are higher than what we budgeted, and our operating costs are actually worse than what we had budgeted for. We generated higher cash from operations than we budgeted. And the dashboard on the right-hand side gives you a summary of our legal challenges. So we give you in light brown the cases where we are being sued, where someone is suing us, and the green is where we are being sued. And you can see that a high amount of those is actually with Petro SA. Chairperson, when it comes to business performance against predetermined objectives, as Mr. Moagi had indicated, as the year progressed, we improved. So you can see now that there's 9 KPIs that are not achieved and will progressively do better as the year progresses. 2 are below targets, and 10 by Q2 were on target, and 2 were above, and another 2 were actually exceptional performance. Chair, when it comes to the net profits dashboard that you see on the red-green circle, that is actually the indication against the budget. So you will see that SEFSOC, their net profit is better than budget, so is SFF and PASA. So you'll see that PASA made a loss in the quarter, but the loss is much better than the budgeted loss. So that's what I mean, that indication is actually against the budget rather than that it is a profit. Next slide, Mr. Makanya. Chairperson, all this performance has to take into consideration what was happening at a global level, as well as our region, as well as, of course, domestically, what was happening in the country. In terms of the global oil prices, we saw for the first time since COVID, since the elevated global oil price, we saw the oil price Brent specifically moving below $100 per barrel mark. This, of course, still is an elevated oil price. So even though it has cooled down, but it's still very much a high price. We saw OPEC cutting production because of their view around oil demand globally. The energy crisis, Chairperson, not just in South Africa, but globally, of course, in Europe, it's being precipitated by the tensions between Russia and Ukraine. China, Mr. Moagi spoke at length about its impact and what happens when its economy cools down, but we saw their economic activity started to recover. And then in terms of climate change, Chairperson, the world is still focused on reducing the impact of climate change. We do expect global inflation to rise, and with that comes the risk to us as a world being able to mitigate the climate change, as the economy is still very much dependent on oil and gas. Chairperson, in terms of our region, we saw that the interest rate, or at least the repo rate, continues to increase against a very slow economic growth. And therein comes the challenge that you've got interest rates rising, where else the economy is not growing. In terms of the exchange rate, Chairperson, we saw the rand continue to deteriorate against the dollar. Mr. Moagi has indicated in his opening remarks that this bodes well for some businesses, for some of our businesses, but does not go well for others in the group. We saw Astron giving an indication that they want to restart their refinery by Q4 of 2022. So they made this announcement during the reporting period. At that time, Chairperson, we were concerned about the potential grey listing of our country, and we know that since became a reality. On the right-hand side, Chairperson, we are just giving a summary of our economics assumptions versus what the reality became. So you can see that we had assumed an interest rate of 4.45%. The reality was that the interest rate was at 5.42%. So it was much higher than we budgeted. You will see this because the impact of this being the higher interest that we will earn on our cash reserves. Prime rate moved the opposite direction, and inflation in the country is worsening. Salary adjustments landed at 5.9%, where else we had budgeted by this quarter that would have made salary increases of 8%. I've already spoken to the deteriorating exchange rate that we are, by the end of the quarter, we were sitting at about 17.97 rands to the dollar. The oil price is much higher than we budgeted, but of course it has cooled down from previous periods. Mr. Makhanya, I think I've already spoken to most of the comments there that the weakening rand favors some of our cash reserves, especially those that are foreign denominated. Mr. Moakhi has already spoken to the backward debt market. Thanks. Please go to the next slide where I'll talk to the results business by business. Chairperson, SAFSOC, our holding company, reported a net loss of 18 million, which is much better than what they had budgeted. They budgeted that by this time they would be at a net loss of 199 million. As I indicated, you have higher interest income when interest rates increase. So you see this coming through at SAFSOC level. There was also underspending of 142 million on some of their operating initiatives that they had. AE continued to generate an operating loss of a net loss of 1.3 million, which is much better than the budgeted net, which is much worse than the profits they budgeted for of 34 million. So you saw on the earlier slide where the robot for AE was red, showing that their reported loss is profit is actually, which is a loss, is actually much lower than their budget. The total energy supplied to Eskom, even though it increased because they were trying to make some measures to correct the coal qualities they had, they still did not make the target. Chairperson, even though they made a loss, they are still liquid and they've got cash and cash equivalents of 372 million. EGAS, Chairperson, generated a loss of 111 million. Mr. Moakhi spoke about the money that they continue to expense in relation to the Romco transaction. A lot of that loss, 43 million of it, was due to the consulting fees that they paid for that. But the company remains liquid and solvent with investments of 5.3 billion versus liabilities of 3 billion. The Petroleum Agency, Chairperson, from a net profit in Q1, we made a loss in Q2 as we continue to implement our stakeholder engagement initiatives, which are taking a lot of money from our income, which, as you know, we get from the DMRE. And going forward, you will see that the income that is allocated to the agency from National Treasury is not enough to cover our operating costs. To that extent, I must thank the department because they've started issuing, or they started the process of revising our regulated fees. Chairperson, it's a known principle that a regulator of an industry must be funded by the industry that it regulates. It should not be completely funded by the fiscus, but this is the case with PASA. And we've made the plea with the Department of Mineral Resources and Energy, and they've had our plea, and therefore they have since started the process of revising the fees that we charge industry with the objective of finalizing this by 31 March 2023. We're also looking at how we can review our structure for our data sales. One of our main income earners is us selling the petroleum data that we hold to industry to enable them to look for oil and not look for data. Strategic Fuel Fund reflected a net profit of 359 million, much higher than the budgeted loss that they were expecting of 63 million. They could not commence with the planned operations on the Montago Gardens terminal. So this profit is against the backdrop of them not implementing some of their initiatives. Petro SA chairperson, Mr. Moakhi has indicated, and the chairperson of the group indicated that we have a war room that is established to look at how best we can make sure that they are kept afloat. But in spite of that, the loss in the organization continues to deteriorate against the profit that we had planned of 49 million. They did receive dividends from their Petro SA Ghana of 439 million rand to date. And as I indicated, the loss, the contribution to the loss is also because of the payments they made as they parted ways with some of their employees. This is an initiative, Chair, to try and curb costs in the entity. Thank you very much, Mr. Makhanya. I'll hand over to Ms. Mngengwane, who's going to do the Q3 performance, the acting CEO of Petro SA. Thank you.
Thank you very much, Dr. P. I hope I am clear. I'll briefly speak to the overview around performance on Q3. As reflected in terms of the revenue generated, the actual was at about 19.3 billion rand, slightly lower than the targeted 20.5 for the projections at the year to date. From a net loss perspective, we are reflecting as at Q3 a net loss of minus or negative 254 million rands. And we can see that according to the actual reflection for the Q3, the operational expenditure exceeded what the budget had been at a 3.1 billion level. And I think this does become quite a critical aspect when we look at the overall impact on the performance of the group at large. We see that the operating profit and loss is reflected and is higher than the projected 797. And the year-to-date net investment is also higher at 5.026. If we had to move on and then look at the business performance against the categories identified, we see that from the KPIs achieved, we see an increase to 7 as at Q3 of the financial year, with 3 partially achieved. And at that point in time, 5 of the KPIs for the group has yet to be achieved. 5 were rated to be exceptional and above the target, with the balance of the 5 being rated as above the target. Chairperson, we see that as at Q3, 3 of the entities were reflecting a red, namely Petro SA, AE, as well as IGES. And I think, Chair, as we go into the details of each organization, will provide context as to what has attributed to this particular picture. If we could move on, Mr. Makhanya. The view that we are reflecting shows a snapshot around the key trends in our operating environment, again, taking a global, regional, as well as local scan that is influenced both at a macro level as well as at a micro level. We see that the geopolitical dynamic continues to have its play, the context of the Ukraine-Russia, as well as in the instance of what we're seeing at developments in the Eastern economies. In that context, we still see that the COVID-19 impacts, particularly in China, continue to have contributed to some of the volatility that also has transcended into some of the economic trends and changes that were reflected in Q3. I do think that what we do need to take note of as well is the challenging landscape insofar as the energy sector is concerned was further exacerbated in this period. Earlier on, Mr. Moagi highlighted that one of the trends that we're seeing is that to ensure security of supply, the various European nations in themselves have started to also increase their consumption of coal. And I think that's a telling indicator that we do need to take charge of security of supply in the decisions and the strategies that we are employing as a region, as a nation at large. Then what was quite evident from a local perspective was that we had now reached the 200-day mark insofar as load shedding in South Africa. And I think that does also reflect quite a severe picture insofar as the stability and security of supply element that we need to be talking to. I think this drove a focus from various entities within the group to start to look at how best we are supporting or alleviating the challenge insofar as the electricity and energy landscape is concerned. What I would then like to do is, if I could request Mr. Makhanya, we move on to the next slide. I think what the next slide will be doing is unpacking at a group level what some of the dynamics and milestones had been achieved. Overall, I think we still see quite a positive indicator from both IGAS and SFF, who were still reporting and were able to report a positive net profit at the end of Q3. Of course, with IGAS, I think the developments relating to some of the consulting fees associated with the acquisition of the 40% of the additional shareholding in Ronco was a factor. However, it also translated to a rich dividend or a partially lower dividend being received by IGAS at the time. And I think that has also been quite a significant impact on the overall performance in the group. SFF continued to also reflect a positive net profit in terms of the 209 million that it had achieved against a loss of 97 million. And I think this is also linked to the sale of stock, which achieved or allowed quite a significant revenue stream for the organization. Important milestones in the SFF trajectory in Q3 included the NERSA hearings linked to the tariff application. I think additionally, we saw some positive developments where in Q3, SFF did register and recognize revenue associated with its share in the Montague Garden storage facility. I think additionally, SFF also was able to secure the support and approval of the Competition Tribunal on the acquisition around the Avidia facilities, and that was in December. The SEFSOC reflected a loss of 9 million, higher than the budgeted, of course, of 286. And I see in this particular space, we did see some good progress made with the Section 54 process being advanced around the Renogen project. And that also we're seeing engagements continue with the matters relating to the SAPREF acquisition, where SEF engaged with partners BP as well as Shell as part of the ongoing negotiations. It's important to also mention that the Aqua Redstone project had also significantly progressed insofar as reaching about 58% of the targeted progress milestones. When we come back to the AE context, we see that the organization achieved a net loss of 119 million. And this is also further, I think, exacerbated by the diesel supply interruptions, which led to some intermittency in the production. However, I think that is a matter that has been resolved. I think in collaboration, AE and PetroSA, we have since made provision of some stock to AE and continue to work together with AE in that regard. We also see a negative loss in the instance of BASA at a 3.1 million. I think as mentioned by the CEO of BASA, the need to also improve or increase the self-generating capability of AE also was significantly supported with the release of the draft regulations for the revised fees, which, as indicated by the CEO, should be concluded by the financial year end. On another note, it's important to indicate that from a PetroSA perspective, the recorded performance demonstrated a loss of 507 million against a budgeted loss of a profit of 361 million. That said, there had been a continued contribution through the PetroSA Ghana dividend to the amount of 888 million at that particular point in the year. It's worth also indicating that the turnaround plan of PetroSA was anchored on achieving a 3.5 billion litre volume sale in the financial year end in order to achieve break even. In pursuing this particular strategy, as mentioned earlier on, is we have encountered some challenges on the back of increasing costs of imported product, largely attributable to the freight and shipping aspect. However, as at Q3, we can report that we had started to see an increase in the number of vessels that PetroSA was able to import and starting to also reflect a positive margin. Additionally, we saw traction gained around the sourcing strategies that had been adopted, which sought to also diversify the supply base that we would be utilizing in this regard. Chair, as we were doing this, I think there were some key notable milestones where PetroSA was able to support the provision of diesel to Eskom in that particular period. And I think we continue to work with that. And of course, I think the volatility remains around the price implications and the need to improve the planning and forecasting around demand to ensure that we are optimizing both for Eskom as well as ensuring value is created for PetroSA. Going to request that we then move on to the next slide, Mr. Makhanya. I'll summarize the key themes and strategic programs that we would be measuring performance against for the group. And in total, we have 5 that are reflected on the slide. I must make note that on the commercial sustainability leg, we are seeing a positive progression, whereas at third quarter, we're seeing an indicator score of 5, having progressed from a 3 in the first quarter. However, insofar as aspects relating to the consolidation and turnaround, and particularly on matters relating to the overhead costs, as well as the achievement of a sustainable net profit margin, we are still seeing a challenge and a reflection of the rigid and stubborn nature of some of the costs that we are carrying. And I think this is the space where continued work is being advanced to look at how we are optimizing our cost structures while increasing the revenue streams that we are bringing in, such that we are seeing a gross margin that allows us to adequately service our obligations on a monthly basis. Mr. Makhanya, if I could request that we also move on. I think here we are seeing a picture that is consistent with the message. And if we look at under the operational excellence, we see that where we are seeing the reds, it really relates to, again, the costs associated with our operating model, as well as the need to improve our utilization and productivity to ensure that we are realizing the level of revenue that ensures we are sustainable as a group. I think, Chair, that does bring me to the close of the sections that I'll be covering. At this point, I will hand over to Dr. Mogoga. Thank you.
Thank you very much, Chair. I think this slide, Chair, shares with the members, Chair, and the whole committee some of the business development initiatives that are quite strategic that the SEF group is engaged in. And we also need just to indicate that this is not an exhaustive list, but it's a list of those critical projects that are going to move the needle in relation to not only the commercial sustainability of the SEF group, but also the strategic nature in which the group can contribute. Maybe let me start with the first one, Chair, the Aqua Red Stone. As Ms. Nemane has indicated, there's been good progress from the standpoint of construction under the period Q1 to Q3. We would also like to indicate that the team on the ground is doing quite well to also manage the delays, Chair, that came from a logistical standpoint in the East in relation to the impact on some of the lockdowns and in relation to the material that has been sourced that was critical on site, Chair. So the team had to come up with an accelerated recovery plan so that the COD is not delayed, Chair. And I think what needs to also be indicated with this project, Chair, is that given the power challenges that we're seeing in our economy, we're still engaging on the extent to which we can make available excess power that is going to come out of this plant over and above the 100 megawatts reflected in the PPA, Chair. As indicated, still engaging on the sub-ref deal between Q1 and Q3 with the sellers. Chair, the long and short of it, Chair, is that it's a value discussion also linked to strategy. Since the refinery is flooded, then the question has moved to issues of value to be made whole for to take the asset, Chair. I think what has always been an area that would be important for the stabilization of Petro SA, it has always been a good downstream acquisition or expansion. We're engaged in a competitive process in that regard, Chair, and we continue also in this current quarter to close out in relation to the acquisition of that downstream opportunity. We also need to indicate that that opportunity is competitive. SEF Chair also reached a no-go decision in relation to the first onshore production right at the called Project Richmond in the Free State. We did receive our approvals and from a ministerial standpoint, both from the DMRE and concurrent from the National Treasury, we were finally engaging the lenders to close out this acquisition, Chair. It's not only important from a helium production standpoint, but also from a gas to power standpoint, given that LNG has been produced, Chair, from that opportunity. We continue to engage, Chair, during this the reporting period in the development of the Coega LNG terminal. We also saw the conclusion during the reporting period, Chair, of the Avidia acquisition, and this is quite important from an LPG standpoint, given the closure of refineries, Chair. We are at the point as a country where we also need to think about business development that goes at the core of putting together infrastructure that is going to ensure security of supply from the standpoint of some of the products in the refinery slate that are quite difficult to land, Chair. And I think this acquisition plays that stabilization role in the southern part of the country. We also saw the conclusion, Chair, of the BP terminal storage through SFF again, which has important implications for our ability to store jet and our ability to store diesel, and not only stabilize from an Eskom standpoint, but also start to stabilize from a jet standpoint, given the current challenges that as the SEF group through PetroSA and SFF, we are responding to in relation to the jet availability challenges. We're also seeing a move in the feasibility side of things for the T project, which is quite critical, Chair, for AE in relation not only to its financial stability, but also the continued good quality coal availability for our power stations, so that we ensure that the feedstock that feeds our power stations is of high quality, but also export quality coal that will be coming out of that project will be quite important for the commercial position of AE, Chair. We also continue, Chair, to play a critical role in stabilizing the supply of product for Department of Defense and Eskom, Chair, so that at least we ensure the efficient operation from the level of the Department of Defense, but also avail product for Eskom, given the current challenges that we have. We continue, Chair, to work with our shareholder department to push on in relation to the solar water heating project. And on the left, Chair, the final depiction just indicates where we are with some of these strategic projects that we think are critical to turning the needle. I think what I also need to add, Chair, which was quite critical, that came in Q3 as in a form of approval from Cabinet, was the allowing PetroSA to be able to go out to market to seek a partner to develop the GTL infrastructure and bring it back to operation. And I think team did not waste any time, Chair. As early as January, beginning of Q4, that business development opportunity was implemented, which really goes to the core of some of the challenges of capacity utilization at PetroSA. Next, Mr. Makhanya, I'll now hand over, Chair, to Ms. Tupana for human capital overview. Thank you.
Thank you, Chair. What I'm just going to cover, Chair and honorable members, it's the overview of human capital. During the Q3, in terms of the headcount, as a group, we are sitting at 1,498, which is a slight decline from the Q2 numbers that we've seen. We also saw that from the PetroSA point of view, there was also a reduction in terms of the numbers, moving from 897 to 894. From the SEFSOC, Chair and honorable members, you will see that there is a slight increase in terms of the numbers during the current quarter. And I think, Chair, in relation to the contributing factors, when it comes to that, I think as the colleagues have already alluded earlier on, particularly around the issues of growth initiatives that we are embarking on, we do think that there is certain skills that we need to make sure that we have to be able to support the organization when it comes to the parenting strategy that we are pursuing as an organization. There hasn't been any increase when we're looking into IGAS and SFF in terms of the headcount. When you're looking into the appointments and the termination, I think in Q4, we see that there are numbers that have been increased, which it resulted to about 40 new hires that we have. But also we do see that there were some termination that were there, mostly in the contributing factor in that space was as a result of AE. And I think, Chair, as you have also saw earlier on in the slide, that AE is trying to make sure that it sustained itself, but it also trying to make sure it improved. So some of the overhead costs were looked into, and that also resulted into the number that resulted into the termination within that space. When it comes to gender equity, I think, Chair, in relation to that, we are seeing a picture that we having 66% male versus 34% of female. However, Chair, we want to also indicate that we are continuously working in making sure that there is not much gap between the males and female within the organization. We are starting to see that there's a bit of improvement compared to where we're coming from, particularly around the female representative at senior and executive level. However, the picture is still not yet where we want it to be. In terms of the racial profile and leadership, I think, Chair, we're currently sitting at 63%, which of course it is lower than the 79% that is the target for the NEAP for African. However, again, continuously as a group, we're working into making sure that that picture, it is improved and we are on the target. And I think we are really getting closer into the 79% target. I think, Chair and members, when you're looking into the issues of skills development, you will see that we have really contributed in terms of investing the talent and initiatives to improve employees' skills, which as a result, it resulted to about 3.5 million, of which really out of the 3.5, 1.2 was relating to functional training within the workspace that we are operating in. And I think, Chair, lastly, in terms of the human capital, we are seeing that there's certain elements or certain areas in terms of the key risk that we need to continuously focus on. There we'll be looking into the culture issues, and particularly, Chair, on the issues of culture, we believe that we still need to tighten some of the belts when it comes to performance monitoring. We still believe that we need to tighten issues around how employee perceive self in general across all subsidiaries, but also trying to increase the morals of the employees through our engagement so that they are continuously aware what is the direction that the organization is taking, but also they are aware what are the key strategic goals that will make us to be able to turn the organization around and continuously to be sustainable as an organization. We do see, Chair, that there's still some work that we need to do collectively when it comes to the issues of leadership in terms of trying to make sure that we strengthen that area, but mostly around making sure that we equip our leaders to be able to lead this organization with the necessary tools, with the necessary skills that are happening. So trying to put in around there, what are the critical leadership training that are required for this organization to be able to lead us forward. I think, Chair, that summarizes the picture in terms of our human capital. I will then hand over with your permission, Chair, to Mr. Pitso to take us to the next slide. Thank you, Chair.
Thank you, Chair, for the opportunity.
Apologies, Chair. Chair, I think at this stage, we will bring in a CFO to just talk through the numbers, and then we'll deal with the rest after that. Thank you, Chair. CFO.
Thank you, Mr. Moahi. Good morning, Honorable Chair and Honorable members, Group Chairperson, CEO, and colleagues. On this slide, we're showing how The different asset classes have performed over the 3 quarters. These are average figures that we are showing here. And you will note that we hold a lot of cash, 42%. And then we also generated the blended return overall of negative 0.3 on average for the 3 quarters. And important to note is that the operating assets are not really performing well. They are generating negative returns and thus pulling down the overall performance of all asset classes. And the major contributing subsidiary within the group on this asset is Petro SA and AE. And as indicated by previous speakers, there are plans in place, initiatives in place that are being implemented to turn around Petro SA and also AE's performance. And when we get to that point, this operating asset is going to generate positive returns. On the next slide, Ndati Makhanya. Here, Chairperson, we're trying to show the financial performance and also the financial position of the group over the 3 quarters. It's actually the trend over the 3 quarters. And this is a summary, high-level summary of the next slides that show the details of figures. So if you look at the financial performance, as indicated, we recorded performance that is not aligned to our plan for the first quarter and 3rd quarter, but there was an improvement in the 2nd quarter. And this is mainly due to the sale of strategic stock that was once-off in nature. And if you look at the major contributing subsidiaries on the performance, the poor performance that we are recording is actually AE and Petro SA in the 1st quarter. On the 2nd and 3rd quarter, the major contributors was Petro SA, AE, and iGas. And if you look at the performance, the projections of performance at the end of the financial year, we are anticipating iGas to improve and achieve the financial performance as per their budget, as they will be receiving the last tranche of their dividend from Romco, which will improve their financial performance. But as for Petro SA and AE, there will still be a struggle to turn it around. And on the next set of the bar charts regarding the equity, you will note that the equity, our equity has been reducing over the 3 quarters. And this is mainly due to the net losses that we recorded for each and every quarter, which is actually dipping into our equity as our business is not generating enough income to cover our operating expenses. And on the cash balance, our cash is also reducing over the 3 quarters. And there are main investments that we have that resulted into cash outflows in the 3 quarter. The first one is investment in Aqua, which was paid by SEF. It's 148 million that was paid towards the Aqua. And from SFF side, we paid 300 million towards the BP Montague terminal facility. And then we also paid 1.15 billion towards investment in Romco, which is actually the equity that we have put down for iGas, and also the loan that was advanced to CMG towards their 15% additional shareholding in Romco. On the next slide, Mr. Makhanya, just to highlight here in terms of financial position, performance actually, as I've indicated that
we performed well in the second quarter, and the major contributor there was SFF. But for the first and third quarter, our performance was below target. And the major contributing factors there is operating expenses that were higher than anticipated due to the once-off payment of BSP's payout at Petro SA. And also on the sale of strategic stock, the net proceeds for that strategic stock had to be paid into equalization fund as per the SAFE Act. And you will also note, Chairperson, that the net interests are higher than what we had budgeted for, as indicated by the previous presenters. This is due to the rising repo rates that benefited us there. But also important to note on that line of interest income, it's there are two elements there. Partly it's returns that we received on cash investment, and we also received the interest payment on the CMG loan. On the next slide, Mr. Makhanya, on a financial position. I think what is important to note is that for the 3 quarters, we remained solvent. And then, and we know that majority of our assets are held in cash. And the reduction in our equity, as indicated, is as a result of the losses that we incurred over the 3 quarters, which resulted in us dipping into our equity to fund that deficit. And then on the liabilities, our ratio there is at 29 total debt and 71 total equity. And important to note there is that what drives our liabilities is rehabilitation, which takes 59% of our total liability, and this rehabilitation provision is in relation to Petro SA and also AE. On the next slide, on the cash flows, important to note here is that there has been progress in implementing some capital projects within the group. There was a movement of 5 billion over the 3 quarters under review. And the biggest amount was going towards investment of additional 50% ROMCO shares. And also the loan that was advanced CMG for their portion of 15%. We also invested in the BP Montague, as indicated previously. And then on the financing activities, you will note, Chairperson, that the amount there is reducing, and the major movements are as a result of, I guess, paying back the loan that was raised for additional 15% ROMCO shares. And we also went out and obtained a credit facility from GBSA to fund the additional 10% investment in AQUA. On the next slide, Chairperson, we are now looking at the financial governance. And Chairperson, you know that there has been a slight improvement in this control environment for irregular expenditure, as we have managed to put a cap in other subsidiaries on irregular expenditure, and we've seen a couple of subsidiaries not recording any irregular expenditure in the period under review. And as we are still dealing with this backlog of 1.085 billion of irregular expenditure that was incurred historically or in the previous financial years, we have since managed to get condonation from National Treasury for the amount of 62.3 million. And these cases are the cases where National Treasury is really satisfied that we have followed processes, and much as there was irregular expenditure, we managed to demonstrate to National Treasury that the amount that we have paid for these services and goods, we did receive value or benefits equivalent to the amount that has been paid of 62 million. But we are still dealing with the backlog, Chairperson, moving slowly to clear the 1.085 billion. And that would take the same convincing from our side to National Treasury to demonstrate to them that we have benefited for the services and goods of the equivalent amount that is recorded there. Failing which, Chairperson will have to recover any amounts that are paid over and above the value of services and goods that we have received. And important to note here, Chairperson, is that all the expenses that were recorded of 33 million for the period under review, all these expenses relate to contracts that were concluded in the previous financial years. So this is just the carry-through effect until such time that we get condonation from National Treasury, and the future expenses are then regularized. So until such time that we conclude these cases, they will remain generating, or maybe will continuously record irregular expenditure. And the affected subsidiaries within the group, on the 33 million that were recorded in the first, second, third quarter of the financial year, it's SEFSOC and also AE. On the next slide, Chairperson, we are showing the fruitless, wasteful, and expenditure. And you will note, Chairperson, that the only subsidiary that recorded fruitless and wasteful expenditure is SEFSOC, and the total amount is 841. And I just want to assure the committee that we are busy dealing with these cases to make sure that we recover this amount from the officials who transgressed. And these are mainly penalties that were charged by SARS for late payments, and also a smaller amount there in relation to interest on late payment. That is all from me, Chairperson. Thank you. I'll hand back to Mr. Moahi.
Thank you very much, Chairperson. Chairperson, just to record that unfortunately Mr. Pitso is traveling. We've asked Mr. Neville Ephraim to talk through the rest. And at this stage, I'll hand you over to Neville Ephraim from IGES. Thank you, Chair. Mr. Ephraim. Neville, can you hear us? I think you may be muted.
Good morning, all. Am I audible?
Yes, you are, sir.
All right. Thank you, Mr. Moahi, and good morning to you, Honorable Chair, to the honorable members of the Portfolio Committee, our SEF Chair, chairs of our subsidiaries, CEOs of the SEF Group, and other members attending this meeting. SEF is currently managing 9 strategic risks associated with our strategic pillars, and we'll get into the details of those risks in the next slide. But Chair, at a high level, and as is evident from our heat map and the inherent risk exposure, that we are managing 4 risks, or 45% that are extreme, There are 2 risks of 22% each at a high and a moderate levels, and then 1 risk at a low level. Chair, in January, the CEF board approved the enterprise risk management policy and associated risk tolerance levels, and with that, the standard operating procedures. So in line with that, Chair, we are rolling out the group risk awareness programs and implementation of the Compliance Assurance Forum once that's approved, and then proceeding with the development of the ERM plans and parent strategy risk plan. Also at the same time, supporting delivery of the strategic projects and supporting initiatives for external funding with no risks. We are enabling the risk management support for the turnaround of the PetroSA in all its aspects, and those include, but not necessarily limited to, governance, strategy, finance, people, processes, and systems. And this is via the shared services model once that is approved. We are also managing the risks associated with CEF repositioning itself and the implementation of the SANPC, and also cascading strategic risks to the to operational risks. Over and above this, we are also progressing work on various key initiatives in relation to our mandates to improve the group's ability to mitigate around security of energy supply imperatives. And this is from a policy, structural, and operating model perspective to deal with issues of import capability, access to key infrastructure, and our global presence. So next slide, please, Mr. Makanya. So if we focus on the top 6 risks and where they have moved to from the inherent risk to the residual risk exposure, from a financial, on the financial sustainability that moves with our controls from extreme to high, and the mitigations that we are currently working on are the war room discussions and value preservation tactics. Those war room discussions have been touched on by both Mr. Moakhi and Dr. Makoko. On the growth and diversification risk that moves from extreme to low, and we have, in terms of mitigations, a very comprehensive project pipeline. We also have the CEF strategic investor strategy execution, and then business development centralization from where we are managing group initiatives. Regarding the strict risk related to strategic relevance and reputation management, that moves from extreme to low, and there we have strategy session discussions underway with all of the CEF group companies for alignments, and that is driven from the chairpersons and the CEOs forum and supported by coordinated group planning. Then regarding regulatory and compliance, that moves from extreme to medium, and we have processes to ensure compliance with applicable laws and other legal requirements of good governance practice. And of course, the tone is set at the top through appropriate ethical codes of conduct, policies, and procedures. Chair, moving on to the risk associated with human capital and shared services model, that moves from a high to a low residual risk. And then in addition to the talent management strategies and plans in place to better define the understanding and to understand our talent supply and demands requirements, we also have leadership development programs. And then finally, Chair, regarding the risk related to cybersecurity and information security, apologies here, Chair. I think it's indicated as a medium risk on the heat map. That's actually extreme risk, and that comes down to high residual risk. There, Chair, we are putting measures in place to address and manage information security risks, including cybersecurity risks. CEF also has adopted privacy policies to set a standard regarding the protection and appropriate use of personal data. Thank you, Chair. I will hand over back now to Mr. Moahi for the conclusion.
Thank you very much, Mr. Ephraim. Thank you, Chair. Chair, in conclusion, the Russian-Ukraine conflict continues to have big impact on the global economies. It actually constrains supply as well, because we don't have enough molecules in the market to go around. Although at this stage, we're beginning to see commodity prices, especially oil, cooling off a bit, but the inflation continues to be stubborn as a result of higher commodity prices. But hopefully, going forward, we'll actually start seeing the benefits of the cooling off of the oil price. The Chinese impact on the global economy as a result of the COVID restriction, that actually continues to impact on our business. Chair, basically, the most important thing is to continuously look at, the impact of all this, both internal and external, factors, and that influences how we really look at our strategic decisions, both medium term, short term, and long term, just to focus on delivering our corporate plan. At this stage, Chair, indications are that the global economy is heading for recession, all those would actually impact on our business as we go forward. But in the fourth quarter, as the chair of the group normally says, is the time that we should be looking at the finishing line, and we're pushing hard to actually try to drive recovery on our performance. At the end of the third quarter, the group reported a net loss of 254 million versus the budget of 208. So basically, there is a 46 million shortfall, or variance that we are dealing with. And that share came from mostly costs. We spoke earlier on about iGas, Romco deal costs, and Petro SA, VSP cost. And the Petro SA, although is a cost now, the intention is actually to shave off the salary bill and make sure that going forward, the business improves. Same with iGas, it's a once-off cost. And as we go forward, we should not be seeing the iGas costs repeating themselves, and we should see the improvement in the salary bill in Petro SA. Also, Chair, there is a amount of 518 million payable to Equalization Fund as per the SAF Act, and that actually shows through in our numbers. Our performance score is 3.19 versus the 5, and we continue to reflect and look at both internal and external factors to actually pull that performance back. Chair, the ongoing solvency and liquidity challenge that is actually facing the group. We all know that the biggest contributor there is Petro SA, because at this stage, that business is dependent on trading and supply, which is a wholesale business, because the GTL refinery is still on care and maintenance at this stage. And as colleagues said, we're looking at options to actually get that GTL refinery back up and operating. The global impact of Russian conflict will actually have a very long-lasting impact on the economy. And what we are doing going forward, Chair, we're looking at the group growth agenda, we're focusing on those initiatives, as Mr. Mkoga spoke about, and we're actually looking at acquisition of assets which would generate revenue to actually grow the group. So, confident that we've got the right projects to actually improve the performance of the group. We're focusing on Petrol SA stabilization. As I mentioned earlier on, we've got weekly teams across the department, the group, the subsidiaries, to actually sit in the war room and go into the details of what was done last week, what needs to be done this week, and what needs to be done going forward. And we're also focusing on AE and making sure that that business is sustainable, because it used to be one commodity, one customer, and if any of those get impacted, it affects the business. Chair, the conversation that will come to the committee to update the members on is the approval of the measure project, and we'll be going to be focusing on that, and finalization of group corporate plan. At this stage, it has gone through the subsidiary boards, has gone through the group board, and what is left is the engagement with the department to finalize the approval of that plan. And self-repositioning is very critical, Chair, and we're looking at shared services to make sure that we can, share costs across the group with the view of improving the bottom line and getting rid of duplications, which actually tends to be distractions in terms of our performance and our agenda. Chair, that's the story of the SEF group. We will pause there, Chair, and hand over to you, Chairperson. Thank you, Honorable Chair. Thank you, honorable members.
Thanks very much to the executives, Honorable Chair. I would like to just summarize then that you have now seen the year-to-date performance for the 3 windows that you requested. You've seen also the highlights of the complexities of the environment that we operate in, the local challenges, geopolitical dynamics, and also just overall the global economy. Mr. Moagi has also pointed out that something that we watch very closely now is the fact that we are 4 weeks away from the end of the 4th quarter, which really marks the end of the financial year. And therefore, all boards are doing their best to keep their subsidiaries on course and making sure that we achieve our targets as had been contracted. And I think on this note, Chair, let me hand back to you, Honorable Chair. And thank you very much to yourself and also to the committee members for giving us the opportunity to present. Thank you, Chair, and I hand back to you.
Thank you very much. Chair of SAF and the chairpersons of your subsidiaries, as well as the chief accounting officer.
Seems as if we lost the chair. I'll just check with him again.
Sorry, honorable members. It's the Wi-Fi. It's a competition between the Wi-Fi and the mobile data. I switched off the Wi-Fi now. Okay, I was checking. Are there any questions of clarity or comments on the presentation? I see the hand of Honorable Likov. I see the hand of Honorable Madogwe. Any other hand? The hand of Honorable Malinga. Any other hand? Going 1, 2, 3. Okay. Honorable Likov, Honorable Madogwe, Honorable Malinga, I'll come at the tail end.
Thank you, Chairperson. I do have a couple of questions. Thank you very much for the presentation to the group, or on the group. So firstly, I mean, I did note the comments that were made about the loss on accounting for late payments to SARS. I just want to clarify, is that 824 million rand? And if that is the case, you know, it's a very difficult to defend such egregious accounting failures when we have a situation where the group has effectively operated at a loss. So I know that it was mentioned that there are interventions that have been taken place, I'm assuming with the accounting officers, but if I could just request, you know, a little bit more detail on that. It's a very large sum of money, and this is largely, especially if it's just for late payments, unacceptable, really. I mean, that's just a huge amount of money for you know, for not keeping up your obligations as accounting officers. The other thing is just with regards to the financial sustainability that was mentioned in the war room, and specifically the risk tolerance levels. My concern is obviously the group is very heavily exposed to climate risk and to the incoming kind of like regime that's proposed with the carbon border adjustment mechanism. I'd just like to ask, in terms of the war room and the risk tolerance levels, I've seen nothing mentioned about climate risk specifically and the carbon border adjustment mechanism. How is the group responding to these specific threats, which should be rated quite high in consideration of all others? And I'd like to, I mean, South Africans deserve to have some kind of reassurance that the group is thinking about these things. Thank you.
Thank you, Chairperson. Greetings, everyone in the meeting. I'd also like to extend in welcoming the CF group and for in welcoming the report as well. I have quite a number of questions and a number of clarity-seeking questions. But I think the first one is more of an observation. And I mean, why I'm raising this observation specifically, Chair, is because I think even in the last presentation that we had with the group, I had raised the very same thing. And also it's quite alarming and concerning that 3 slides would have the exact same mistake in terms of the proportions. The numbers are not corresponding. It's the exact same mistakes that were there last year that we're told was a typo, and they're again here today. And it doesn't make sense that no one pitched that up. And that therefore, to a certain extent, even if the presentation is quite good and informative, it makes one sort of question whether even the stats that were being given or the report that we are being given is as accurate as expected. Also, I'm worried that we are just getting things that are copied and pasted without people actually processing the information the way that it should, because those are very obvious numbers and those are very obvious stats that one cannot even overlook on the proportions of males to females and also on the proportions of in top management and senior management to be specific. It's the same thing, the numbers are not corresponding there. The second question that I have, I think it is on Q1, where it says that the 384 million loss is lower than the budgeted 206 million. I don't know whether that is also a typo or what. I'm just not able to understand what that means. So if maybe one could elaborate in terms of how 384 is lower than 206 million. And then the third question that I have is specifically on the KPIs. One would observe that in the first quarter, there were about 13 in total of those that were either not achieved or below target. And then by the end of the third quarter, that has gone down to 8, which is an improvement. But one is also wondering whether by the end of the financial year, which would be Q4, what measures are being put in place to make sure that all the 25 KPIs, if one would actually put them into total, will be achieved and on record time. The fifth question that I have, it is on, okay, all right. So the fifth question that I have, it is on the irregular expenditure. I know that it was reported in the meeting that this is irregular expenditure from the previous term, or it was carried over from the previous term. And one is interested in whether what were the sources and what were the consequences for the people that actually enabled that irregular expenditure, because we don't want a situation where we're just told that we are carrying over consequences of irregular expenditure from one point to another, but we're not being told what were the consequences that were faced by those that enabled such. And then also in terms of the comment on fruitless and wasteful expenditure, we do note and appreciate the commitment that work is being done in terms of holding those that had created or enabled those conditions to happen. But I'm also interested in what the timeline or the time frame of the conclusions of that would be, because we wouldn't want again next year to be told, no, this is the fruitless and wasteful expenditure that was carried over from the previous year, and there have been no consequences to state. So that is another thing. And then number 6, I am just interested as well, because I think that the term for the 6th Parliament, this is also one, assuming that things would happen according to normal and elections would be in May next year, it means that we have roughly 14 months in office. And ever since one got into this portfolio committee, we were told about the merger of the 3 subsidiaries, which was nearing a conclusion. But up until now, we're still getting reports of the subsidiaries as different subsidiaries, and no one is actually really speaking into when is that merger going to be concluded, and what are the challenges around this. So I'm just interested in that as well. When exactly are we getting the merger, so that we don't actually get these subsidiaries or a report on 3 different subsidiaries, but one group as resolved by Parliament. And then the other question that I have, it is specifically on the sale of strategic fuel stock. I know that sometime last year there was an announcement by Treasury and government that a portion of the strategic fuel stock would be sold so as to curb, amongst other things, the fuel price hikes. So I am interested in how effective that has been, considering that just last week fuel went up again. And if these fuel stocks had not been sold, perhaps things could have been worse. And if they could have been worse, what would have been perhaps the amount that people would have been paying for petrol at this point in time? And then I think the final question, I'm not sure if I'm allowed, Chair, to ask here or at the end of the meeting, but I'll ask nonetheless, and then I'll be corrected. It is not necessarily on the report, but I know that I think the first meeting we had is the portfolio committee, or one of the first meetings was on correspondences that had been sent to the department and its entities. And there was one that had been sent to CF, specifically on the bullying that had been reported to the board. And the report or the response that we got was that was under investigation and that there would be feedback by the end of 2022. However, when we requested feedback by the portfolio committee in February, there had been no feedback or anything. So I'm interested in what were the outcomes of those investigations, especially considering that there had been a commitment from your side in relation to that. And then the second question, again, it's still again on allegations. I think it's an issue that I raised myself, and I think another member of the portfolio committee, specifically on AEMFC, about coal contracts that had been sort of reversed without any proper response or responsibility in terms of why they were reversed. And then secondly, there were also allegations of questionable appointments of staff and replacement of staff with contracts and all those things. And I think that what we got in the meeting when I asked was that that is under investigation by the board and that we would get a report. So I'm interested as well in terms of how far you are with those investigations and when can we expect feedback. Thank you very much, Chair.
Thank you very much, Chairperson. Greetings to yourself, members of the Portfolio Committee, the SAFE group led by Umanowa as the Chairperson of the SAFE group, everybody on the call and our committee staff. Chairperson, let me also join in welcoming the presentation that we've just been given and start on the comments made by, I think it was Mr. Moahi, on the long-awaited measure that we hope this will take off because it has long been anticipated. Chairperson, I have quite a few questions to ask in terms of the performance because we're dealing with 3 quarters. Since Petro SA, that will be on Q1 performance under business performance, Chair. Since Petro SA inability to source petrol economically is mainly attributable to the company's net loss of 521 million against a budgeted loss of 10 million, what immediate actions has the War Room taken so far to reverse Petro SA's inability to source petrol economically? The second one, Chairperson, will be on the SAFE group itself. Considering that SAFE group was unable to achieve 10 of the 25 set key performance indicators in the first quarter, what were the disruptive factors that affected the group's success in achieving all the set KPIs, and what has been done to address those disruptive factors, Chair? Also, Chair, on SEF, I think this one was also raised by Honorable Matogwe, the 384 against the 206, which does not make sense. But mine, Chair, will be not necessarily on the figures, but on their response on the enterprise risk management system in terms of this loss, Chair. Chairperson, AEMFC, low production volumes, is partly attributed to the low coal quality, which does not meet ESCOM specification. What has the SEF group in this regard done to improve AEMFC's coal, okay, let me say AE, coal production, now that unreliable supply of coal exposes ESCOM to the security of supply of electricity risk? Chairperson, on their operational context, how much did the Strategic Fuel Fund spend on the 60% acquired equity stake in the assets of Avedia Energy, which includes liquefied petroleum gas terminal in Saldanha here in Cape Town, Chair? And what is the progress to date with regards to the construction of the LNG Guha import facility with a strategic partner? Why is a strategic partner sought for this project? As SEF Group balance sheet provides it with the ability to source operational loans and as and when required, Chair. Also, Chairperson, what are some of the alternative minerals that AE is exploring to diversify its portfolio and operate more mines? And has AE attracted any funding for either equity or joint venture collaborations in mineral diversification? I'm on quarter two now, Chairperson, same sequence, start with business performance, then operational. What lies behind the decline in the number of SEF group exceptionally achieved key performance indicators from 6 in the first quarter to 2 in the second quarter? Were there any consequence management instituted with regard to this poor performance in the second quarter? While the number of KPIs not achieved declined from 10 in the first quarter, Chair, to 9 in the second quarter, does this mean the SEF group is unable to reach a predetermined objective that they have set for themselves? And what are the details of SEF group's recruitment strategy to reduce the widening gap between female and male employees at the top management level? And which of the SOEs under the SEF group has smaller share of female representation at both top and senior management levels? And what has been done to, or what is being done to correct this, Chairperson? Given the challenges at SFF, Chair, and that SFF could not commence with planned operations at the Montague Gardens terminal due to delays in incorporating SFF's shareholding, which could have brought more revenue. What is the progress to date regarding those delays, and has the SFF been able to recoup the revenue it lost because of those delays? Chairperson, let me go to the operational ones. What is the progress to date with regards to the gravity magnetic survey in South Sudan? And why does why does SEF Group prefer the pre-flood deal rather than the original transaction over the possible purchase of the Sapref refinery asset? Lastly, Chairperson, on their quarter 3 performance. Considering the diesel supply interruptions due to non-payment and procurement delays which have impacted negatively at AE production, what has AE done to strengthen internal controls to avoid non-payment and procurement delays? And Chairperson, given that the non-existence of the enterprise supplier development strategy has resulted in the regression of AE's triple BEE level 8 from a level 4 status, what has been done to address this risk, as SOEs are meant to contribute to economic transformation by bringing the previously marginalized companies and people into the mainstream economy? What is the progress to date with regards to the Vlakfontein life extension projects, and are these projects advancing as planned? Has AE started negotiating the extensions of the contract with Eskom as the current coal supply agreement is coming to the end in 2024? Relatedly, what is the progress to date with regards to AE's objective to increase the production of coal for Eskom by advancing the Klepurti NT projects? And Chair, has the SAFE Group managed to resolve delays in its procurement processes, and what has been the impact of this on the installation rate of the solar water projects, Chairperson, which is the elephant in the room, the solar water projects? If I could be clarified on those ones, Chairperson, maybe I will have a follow-up if I see that I have missed something. Thank you very much, Chair.
Thank you very much, honorable members, with the questions and the comments. Before I give, I'm not shutting you out, Honorable Madobe, except to say, if you remember in the program we adopted as a committee next week, I hope I'm correct, next week, Tuesday, we are dealing with the briefing on the merger of Petro SA, iGas, and SFF. But it doesn't mean if they want to have a take, SAF, you won't give us a clue. Probably it will help to say what then do we expect next week. So I can't say don't answer that question, but I'm just saying it's on the committee's program for next week. I hope I'm correct, Ari and Ayandane.
Correct, sir.
Okay, but it doesn't mean you can't give us an answer if you do. But the rest of the questions, I hope you are taking notes. And can I give it to you now, Sal, to take over the questions?
Honorable Chair and honorable members, thank you very much for the questions. I tried to just to assist the team who are going to be responding to the questions as the executives. I tried to make some notes, but I'm hoping also that they have made some notes. What I would like to suggest is to direct Mr. Moahi to assist. There is a cluster of financial questions, which I believe the CFO should deal with. And then there's also other operational questions that need to be dealt with by the different subsidiaries. So Mr. Moahi, let me hand over to yourself as you and the team respond to the questions. I'll just highlight and make sure that we have answered all the questions. Thank you.
Thank you very much, Chair. Thank you very much, Honorable Chair and honorable members. Chair, what I'll do is I'll go through the questions. If I miss some questions, especially related to the group and AE, I'll ask Dr. Mukoka to come in and help with some questions that I may have lost, what I've missed. Chair, the subsidiary CEOs, my request would be, the questions related to specific subsidiaries, the CEO of that subsidiary pick up those questions, Chair. So what I'll do is I'll go first, and then I'll ask Dr. Mukoka to come through, and then I'll ask Madam Nemani to come through as well on the Petro SA related questions, and then we'll just share the AE questions as they come through. Chair and the CFO, of course, on the numbers. Chair, the first question from Honorable Le Goff is related to SARS. I'll ask CFO to pick that up when she comes through. And the sustainability, the war room, Dr. Mkoka, when you come through, if you can pick that up, I would really appreciate that. Honorable Malinga, number of corresponding male and female. Madam Mchupan, if you can pick that up question when you come through. There's a question also around the 384 versus the 206. Profusely apologize to the honorable members, is the wording, but actually what that means, as I said in my presentation, is that we've got a bigger loss than we had anticipated. The plan was we'll end up at 206. We ended up at 384. So our loss is much bigger. And honorable members will remember, I also said that when we did a presentation that our revenue and our gross margin were lower than that, and that's the impact. That is why we ended up with a bigger loss. So apologies for the waiting on that one. The KPIs, the measures to correct and achieve performance. Honorable Malinga, what we do is, on quarterly basis, we have sessions with the chairpersons of the board, the CEOs and the CFOs across the group. And in that session, or those sessions specifically, which go through each and every KPI per subsidiary, and actually each subsidiary will come up with corrective action, what they're going to do by the end of the year to make sure that we hit performance. Actually, that's what I was referring to when I said, the chairperson will always remind us that we are in the last quarter. So some of the KPIs, as you saw, as we go through the presentation, would have lagged behind at the beginning of the year, which is Q1. But honorable members would have seen that as we go forward, we continue to claw back and actually get closer to our performance. So we're not going to be revising our KPIs. What is not done will be marked as such, but actually our focus on quarterly basis is to make sure that we claw back to deliver on those KPIs. And at subsidiary level, it's a monthly conversation around the KPIs to make sure that we bring performance back. Irregular expenditure and consequence management, CFO can talk to that. But what we have done is across the group, we have set up loss control committees. Those committees will review the irregular expenditures and fruitless and wasteful expenditures on monthly basis. They would then, by the way, that committee is made out of people across the functions from, operations, procurement, HR, finance, and they would actually recommend on each and every line element what action needs to be taken, and if there is consequence management and necessary disciplinary action will be taken. If there's recovery, they will recommend that the money needs to be recovered. So that actually is the action that we are taking. And honorable members, if you look at where we are today in terms of both irregular and fruitless and wasteful expenditure versus where we started from in the last 3 years, we have made huge progress. So we begin to actually see that we are beginning to tighten the grip around our governance and performance on those measures. So we believe we're making a lot of progress so far on that. As Chair said, the measures of the 3 entities, on the 14th, will come and update the committee on the measure, but there has been some delays on that. Basically, one key one being the approval by the cabinet. And at this stage, we've got thumbs up to go ahead with the measure. And of course, honorable members, one of the bigger challenges has been we need to work hard to find a workable solution for PetroSA to make sure that when we merge, we do not merge companies which are insolvent, and also we need to have a plan around how do we deal with the portions of the companies that are not necessarily going to go into the measure. The sale of strategic stock, honorable members, the sale of strategic stock that we spoke about, we sold 270,000 barrels of strategic stock to Total. Actually, that was intervention in the supply disruption, which the strategic stock, of course, is meant for. Total could not get crude from West Africa, and therefore, instead of closing the refineries, they came to us to ask for strategic stock. So that's what we sold. The 6 billion, that process is still ongoing. We're busy with defining the minimum stock level to make sure that as we sell, we do not end up exposing the country without strategic stock. So the Total sale, we will at some stage replenish that stock and buy it back to make sure that the country does have strategic stock. Investigations at SURF, I think, maybe Chair and Dr. Mkoka can pick up on that. I'll leave that to you, Dr. Mkoka. AE contracts which were reversed, I would ask from the group help Dr. Mkoka, and the appointment of staff, on that matter, because the AECO is not on the line. So, I'd appreciate that help. Thank you. Honorable Madokwe, thank you very much for your questions. The long-awaited measure, I think I just dealt with that. Just to reiterate, we should be with the committee on the 14th to give the committee update on that. But at this stage, all we can say is now we've got a green light to actually press ahead with that. The PetroSA inability to source product economically, the CEO of PetroSA, I'll appreciate if you can help with that. What corrective action has been taken on the KPIs? I spoke to that, that each subsidiary comes to the group with all the chairpersons of the subsidiaries and the group chair to actually present the corrective action. So each KPIs that fits into the group would have corrective action coming from each and every subsidiary that is being tested in the meeting with the group chair on a regular basis. AE coal production specifications, I'll ask Dr. Mkoka if you got an answer on that. Please help. The Avedia update, I actually missed the question there, honorable member, but just in terms of the update on that transaction, the transaction is now concluded. We are at the stage where we finalizing the operational details of that asset. But the biggest delay was with the Competition Commission and the tribunal, and that took months and months because there were a lot of objection to that measure. But ultimately, it has been approved. So we are in the process of consolidating that into our operation. And hopefully the old days of Western Cape not having LPG every winter would be behind us. The LNG, the project in Kucha, I actually just in terms of the update on that is ongoing. I know at group level, recently we did advertise and we're in the process of evaluating the applicants to appoint the developer for that project. Of course, at the same time, we are dealing with the regulatory compliance issues, application for license with NESA, and all those are running parallel to actually move that project forward. The KPIs, male and female imbalance, I'll ask Madam Tupana to pick that up as well. Montague Gardens, in terms of the revenue, honorable members, that project also delayed, and actually, after concluding of the transaction, you then go to the deeds office to do all the registrations, and that, so we ran behind schedule as anticipated. But what we continue to do is to look at alternative to actually recoup that revenue, and one of them being recently we were signing a customer, obviously because the market is backwardated. We continue to search for revenue options in the market, and that customer will start bringing revenue into the organization. But we missed that. But when you look at the overall performance, we believe that the bottom line should actually be back in line with the plan on that. Gravity magnetic survey, that has started, on the South Sudan project. Remember that this project was delayed for a while. We lost 2 years because of COVID, but in essence, we have started with that gravity magnetic survey, which we hope that in the not so distant future, we should be able to report back in terms of how far we are with that project. The pages of SUPREF, Mr. Mkoka can help with that, but I think it's safe to say that that conversation is still ongoing at this stage, and the group is driving it, and I'll ask Mr. Mkoka to actually lift the details on that. The progress on Clip Porky and T project is AE questions, and I'll ask Mr. Mkoka to deal with that, and also the solar water heaters, which is also driven by the group. Chair, I'll pause there and I'll ask Mr. Mkoka if you can come in and help, and then after that, the PetroSA CEO and the CFO, and lastly, Madam Tupana, and then I'll come back in. Mr. Mkoka, thank you, Chair.
Thank you very much, Chair. Thanks, Mr. Moahi. I'll try and pick up on the questions that Mr. Moahi did not address, but also just highlight the ones that the CFO and the other colleagues will still need to pick up. Maybe starting with Honorable Lekov's question on the financial sustainability and the climate risk exposure. And I think we agree that there needs to be a pivot in business development that addresses the diversity of revenue streams within this energy space. And one of the important projects that PetroSA is busy with now is the monetization of the tail gas for gas to power purposes, knowing that the gas is an important fuel transition for electricity. So that's one. But secondly, it is also important to note that some of the the risks that the honorable member refers to are being picked up at the level of the SNPC, where Petro SA, SFF, and iGas will form a part of that stable. The large chunk of revenue expected in that merger will be coming from new business, new energy business. So it will be addressing the risk that Honorable Lekhoff is referring to. And please, therefore, pick up on the honorable member's first question. And Chair, on the fruitless and wasteful or irregular expenditure, the reason there would be condonation, so for instance, on irregular expenditure from National Treasury, is because there's been consequence management. National Treasury will not condone any irregular expenditure that does not have consequence management and corrective action having been instituted. So the condemnation that the CFO is referring to is a result of consequence management having taken place, and the part of consequence management also involves really observing the policies and Labor Relations Act in the process of consequence management, affording the transgressors an opportunity to also go through a disciplinary process that is per the policy and the law. And I think CFO, please expand on that, on the issue of the timelines. There are indeed processes as we speak of consequence management relating to issues of irregular expenditure that are ongoing. And I think on Honorable Matokwe's input on a report back on the allegations at AE, we've not received feedback yet from AE board, and I think Chair will maybe also touch on this, and once I think we have, I think that report can be made. On Petro SA and limitations around issues of lending cargoes. I mean, this economically, this has been a challenge of Petro SA for some time. And what we've seen under the current reporting period is an improvement in Petro SA's ability to lend cargoes commercially, but also to increase the number of cargoes that are being landed, not only for Eskom, but the other customers of Petro SA, and the Petro SA's CEO can expand on this. I think on the Gqoba terminal, Mr. Moahi has indicated, and let's touch on that. And I think on the Sapref refinery, I think I struggled to hear Honorable Malinga's question, but maybe what I caught, maybe I'll try and respond to. SAF is still committed to getting hold of the Sapref assets because of their strategic nature. I mean, the basket of assets that we've been engaging the sellers on are quite critical in ensuring security of supply. But I think that the important part also relates to the increases in the prices that we are seeing and are still going to see in relation to the byproducts of producing the three main products in refining activity, such as petrol, diesel, and jet, and those are quite critical. I mean, I'll make an example with LPG, with bitumen and lubricants. I mean, if we don't stabilize that within the South African economy, you then start to see the second round effects of those prices starting to cause trouble from an inputs standpoint. So the strategic nature of that acquisition also goes to addressing some of the challenges that we know, if not addressed, they will just spell disaster for economic activity or value creation that is linked to those products being inputs into the production process. And just to mention perhaps what the main point of contention has been around the negotiations. It's mainly a question of value. We had a flood that occurred. Had the flood not occurred, our estimation is that this transaction would have been closed by now. What is happening was a back and forth that relates to SAF being made whole if the acquisition is to really proceed, because the costs are quite significant in relation to the damage at the Sub-Ref refinery. And that's why there's been this back and forth between us and the sellers. And I think on issues of coal quality, this used to be a very serious challenge for AE that over time, working together with Eskom, AE has managed to deal with some of the challenges, and I think we'll feedback on progress in relation to where the contract negotiations are in relation to the supply of coal. The last indication we had from AE was that these are going well, and I think all the other questions are for CFO, Ms. Tupana, and Babu Msabala on the solar water heating. Thank you, Chair. CFO.
Thank you, Dr. Mzansi. Thank you, Chair. I will start with the question from Honorable Legon on the amount that we stipulated there on fruitless and wasteful expenditure. So this amount is in thousands. We are rounding off our figures into thousands. So that 841, it's 841,000. And this equates to two transactions where an employee missed a date of payment to SARS, and then that amount attracted that penalty of 841. So we are dealing with this matter. The Loss Control Committee has recommended that we need to recover these amounts from the official who transgressed, and we are busy with the process. But what we have noted, Chairperson, is that this amount came through after the official concern had already resigned. So the process that we are following now to recover from this person, we have sent out letters to ask her to pay this amount, and we will follow the process. If we don't get any joy from this process, we'll then consider the legal route in terms of recovering this money. But I just need to bring to the attention of the committee the fact that PFMA, according to PFMA and Treasury regulation, when we recover, we need to assess the costs that we're going to incur in recovering the amount. Should we come to a conclusion that the amount that we're going to spend to recover what is owed to SARS is more than the amount that is owed, then Treasury regulations allows us to just write off this as a loss, because we're going to spend more. It's not economical to recover the amount. So we're in that process. And then on irregular expenditure, the timelines that we have set for ourselves, unfortunately, we are really struggling to pin down a timeline, because most of the cases that are outstanding are old cases. And we have noted when we were doing our analysis that most of the old cases officials who transgressed are no longer in the employ of the SAFE group. So we have to trace them and see what we can do to address the matter. And then in other cases, the documents are missing. So what is really holding us back is us getting the information that we need so that we can process the matters. But we're really exploring different options to make sure that we address the outstanding matters. So the amount that have been condoned, as indicated by by Dr. Mgoka, are cases where we could prove that we have followed consequence management we implemented, and the amount that we have paid here is tantamount to the services and goods that we have bought for particularly irregular expenditure. And then we have to prove those two elements, and there's a long list, Chairperson, for National Treasury to allow us to condone. But as I've indicated, the challenge is on the historical cases. The ones that are condoned were recent cases where we could identify officials, and those officials were still in the employ of SAFE, and then we managed to implement consequence management. And that is why we did receive a condonation there. So I'm not sure whether it will suffice if we can promise the committee that will provide a full report and give the list of activities that are involved in regular and fruitless wasteful expenditure, and also indicate the time when the transgressions were actually realized, so that maybe the committee can appreciate the progress that we are making. And the reason why you don't see most of new cases is because of the consequence management. So it serves as a deterrent because officials are now afraid to be reckless or maybe negligent when they implement their activities, because they know that there will be action taken against them in the form of consequence management if they cause irregular, fruitless, and wasteful expenditure. Thank you, Chair.
Thank you, CFO, Madam Namani, and then Madam Chupan. Thank you, Chair.
Thank you very much. On the Petro's SA side, I will address, I think, 3 areas that came about. The first one relating to the vulnerability to climate-related risk. Dr. Mgoka has covered me to a large extent relating to our focus around gas and transitioning to gas across various applications. For us, we acknowledge that gas has already been categorized as a transitional fuel, which becomes quite aligned to the transition relating to reduced carbon emitting technologies into the future. For a Petro's A strategic outlook, we already see value through the tail gas that would be available in the short term, and have been doing extensive work around also readying the enabling environment insofar as a power generating solution that could be powered using that tail gas. And of course, we see gas being integral also in securing reliable feedstock into the longer term strategy that is beyond 2027. Chair, I'd like to also make mention that from a sustainable innovation perspective, PetroSA has also invested heavily in this regard through our collaboration with the University of the Western Cape, where we have sought to also contribute to the advancement of technologies that would relate to hydrogen. And remembering that in the PetroSA context already, our existing facilities would aid the production of what would be termed gray hydrogen. However, with the modification of the electricity generating sources, we could see that also become categorized as green hydrogen. Additional to that, we've also built a portfolio relating to the utilization of biofuels, and in this regard have advanced collaboration to integrate into the upstream or backward integrate into the agricultural context, where we've engaged the Eastern Cape World Development Agency as just one of the partners that we see critical in this area.
Where the value is for us is the future product line we're able to diversify to include the likes of biofuels and as well as biojet fuel to again address the security of supply aspect while also alive to the carbon and energy transition drive. I'll move on to the next item, which is around the Q1 aspect, around the constraint linked to the inability to source product economically. Subsequent to that particular period, we have bolstered our downstream focus with a particular drive to build and supplement capability and capacity in the organization insofar as our trading arm is concerned. In this area, we've also advanced the sourcing strategy that one has allowed us to bring in a broader pool of suppliers. I think that has aided the ability to improve the commerciality of the cargoes that we are receiving. It's been positive in that not only are we looking at volumes, but we are looking at volumes that are yielding positive margins. Second to that, we've also expanded a view that says with the increased level of importation, how are we utilizing and leveraging the storage capacity, constrained as it may be, the storage capacity in the various entry points in the country? Of course, Mossel Bay remains our advantageous location, so we are maximizing value through that. Additional to that, of course, there's value in us also utilizing the Cape Town facilities, particularly with the acquisition that our sister entity SFF has secured through the Montague facilities. Over and above that, we're engaging access through some of the entry points on the East Coast, including the East London area as well as the Durban area. Those are critical aspects to ensure that holistically we have improved the level one of the number of vessels that we're able to land, as mentioned by both Dr. Mokoka as well as Mr. Moagi. We have increased that to start to also address the target of 3.5 billion litre penetration into the market. Over and above that, we've also then, as I've mentioned, seen that we are bringing in a diversified mix of service providers or suppliers of finished product, which I really think is in itself aiding our overall performance in terms of sourcing product economically. Lastly, Chair, and I am aware that we will discuss this on the 14th of March in a more extensive context. Much of what PetroSA is advancing is underpinned by our partnership strategy. One which I would like to make reference to is the efforts since January, closing at the end of February, relating to the request for proposals from the market, with a preference, of course, to government partnerships relating to sourcing partners, both technically as well as commercially, that would then be critical in the reinstatement of refining in Mossel Bay. Once again, this becomes one of the key initiatives in advancing readiness for the merger of the three entities as outlined earlier on. I'll pause at this point, Chair, and I'll hand over to Ms. Tupane.
Thank you, Chair and members. I will address the three issues that I've noted from my side. The first one that relates to the numbers, the second one that relates to the contributing entities, and the last one that relates to the plans to close the gap. I think I'll start by maybe acknowledging the fact that the numbers do look that they do not add up. However, we want to confirm that in terms of our numbers, when it comes to males and female, it is 66% and 34% in terms of females within the organization. What you are seeing that distorted the numbers, you see that I think we are reporting 78 versus 23, which then gives you 101. On the other side, we're reporting 56 versus 43, which give you 99. That really was through the rounding off that resulted into that. However, we just want to confirm in terms of the numbers, it is 66 against 34%. In terms of the contributing entities that resulting into that picture, we'll see that in terms of the entities that are leading when it comes to the female representative, it is PASA as well as SAF. If you look into the numbers in terms of where they are currently sitting, from the PASA point of view, in terms of females, it's sitting at 54%. And when you're looking into the other entities that are then contributing to the lower factor when it comes to females versus male, you will see that Petro SA and AE are the ones that are really pulling in relation to that overall percentage when it comes to the representative. However, we also want to indicate that when you're looking into the current state as is from the SAF point of view, at executive level and top management from executive level at SAF, already sitting with 3 females, which is the changes that have been recently been made to try and change that picture. From the PASA point of view, even though it's still on acting capacity, you will still see that there is 2 females that have been brought into the leadership of the organization going forward. So we are continuously trying to close that gap in making sure that we do that. In terms of how then are we planning to address this going forward, we have put in the plans, and I think in the corporate plan that we have put forward for the new financial year, under the human capital, there are initiatives that have been put in place that will deal with issues of EVP, which then will address the issues of the recruitment plans. We are already starting to see how do we bring young talent, which then will be groomed and will be able to put forward so that they are ready for the leadership roles going forward. However, we also are putting in place the women initiatives, which we are trying to believe that it will be able to assist us in attracting more females within the organization going forward. We do acknowledge the fact that there is a wider gap as we currently stand. However, we are trying to make sure that we continuously look for the female, and we're also trying to make sure that as we engage with the business across the conversation around the targeted recruitment is being communicated accordingly so that the status will change going forward. Thank you, Chair. I will leave it at that point and hand over to Mr. Moagi.
Thank you very much, Madam Tsupane. I think, Chair, I hope we've managed to cover the questions. I'll revert back to Chair, and Chair, if there is anything that we missed, please indicate, and then we can go back to it. Over to you, Chair.
Thanks very much, Mr. Moagi and team, for those responses. What I would like to do, though, is to request that Chair Boya also just tops up and supplements on the Petro SA feedback, which will also talk to the initiative through the war room and what exactly is covered from that perspective. Chair Boya, would you please give us some feedback, give the committee some feedback?
Yes, good morning, Honorable Chair, Honorable members of the Portfolio Committee, Chairperson, and CEOs of subsidiaries. Yes, indeed, Chair, there's been a lot of effort that has been put in through the war room and also through the board of Petro SA. We are happy to report, Chair and committee members, that at the end of this financial year, we are expecting the revenues of Petro SA to be more than double the revenues we closed at the end of the previous financial year. And I think the CEO of PetroSA did share that what we did was to employ skilled people, but also provided extensive oversight on ensuring that we bring cargo that is profitable, that can be able to assist PetroSA to also be profitable. As we speak, we are sitting with about 2 cargoes out of Mossel Bay, and all our tanks in Mossel Bay are full. That is a sign, Honorable Chair, that PetroSA is indeed turning the corner and is able to assist the country with the issue of security of supply. One of the other risks that we looked at in total with the War Room and the PetroSA board is the issue of diversification of our revenue. We're happy to inform the committee that our efforts to diversify the PetroSA revenue have yielded results, and we now see customers that are taking for us more than 2 cargoes a month, which are over and above Eskom itself in terms of commercial customers that we actually have. And we have indeed are comfortable that we are turning the corner, and Q4, you'll be able to see the results that are much better than the previous quarters that we actually have shown in terms of this particular slide. What also is clear, Chair, is us getting partnerships. We have realized, and we are grateful the cabinet also agreed, that it is impossible for PetroSA to turn around without having partners or equity partners and technical partners. And we have looked at those partners, and our tender that we issued for the refinery and our upstream blocks are a sign that partners are critical and people are willing to be able to partner with PetroSA to assist us in terms of our turnaround program. And thank you very much. That was just a few points that I wanted to share, Honorable Chairperson, and thank you very much, CF Chair.
Thanks very much, Chair Boya. Honorable Chair and honorable members, perhaps just to make a few final points before I hand back to the Chair, to the Honorable Chair. Maybe the first point is that the investigation at AE have not been concluded yet. They are ongoing. I have personally engaged with the Chair Swanepoel of AE to make sure that those investigations are concluded. The report has not yet been received, as Dr. Mokoka has already also alluded to, but we will certainly close the loop with the Honorable Committee once the report has been received. On the merger, Honorable Chair and honorable members, perhaps really just to also echo that the update will be next week. Suffice to say that the cabinet approval has finally been received, and we will attempt in our engagement next week to also just talk to some of the points that were raised today. And then the third point, Honorable Chair and honorable members, really talks to the oversight by the boards. It has already been mentioned that we do hold quarterly performance dialogues with the executives every quarter in preparation to submit to our ultimate shareholder and also to National Treasury. So we engage with the teams to ensure that the corrective actions are taken, and the indication of the intervention that we have really is seeing the improvement in terms of the KPIs that are achieved on a quarterly basis. And however, we do acknowledge as well that by the end of this quarter, we need to ensure that we really come close to achieving all those targets, as the executives will have to make sure that they do what they need to do. We also have the Chairs Forum, which we hold, say, 3 to 4 times a year, where all the chairs meet together with the top executive members of the subsidiaries in order to discuss the operational matters and matters that are of interest to the group, so that we are able to advance the corporate plans of the group. The war room, I think Chair Boyer has already spoken to that point in terms of what has been achieved and how that has supported and assisted in the achievements that they have already started seeing. And lastly, Chair, I just want to echo management apology on the typo on the report. We will also make sure that from our side as the board, we sharpen our eyes and make sure that we submit reports that are accurate in order not to cast any doubt on the information that you provide to yourselves. I trust that we have dealt with the questions that we asked, Chair, and would like to hand back to you, Honorable Chair and honorable members. Thank you.
Thank you, sir. Can I try and not block anyone before? Is there any member who wants to make a follow-up or second bite? Obviously, in a few minutes, in seconds, I see Honorable Malinga again. Oh, there was a question about that Honorable Malinga had written on the question was, why does SAF Group prefer pre-flood deal rather than the original transaction over the possible purchase of the Sapref refinery asset? I'm not sure, I don't want to interpret the question, but my understanding or assumption would have been that prior the flood, there would have been that transactional agreement, but after the damages of the flood, it will mean the purchase would automatically have to be reviewed. I always make an example and say, if you go for your car to have an evaluation and you get an accident or something happens, it would mean it is no longer on its original form. Until that is done, it can be. But I think you can read, Chair, from SAF that question. Before I leave Honorable Malinga, 1, 2, 3, okay. Honorable Malinga, come in.
Thank you very much, Chairperson. Apologies about that. I just remembered one question that I think I did not pose, or maybe I did not hear myself posing it. Chairperson, I just want to ask from the SAF Group, why is SAF Holding Company and iGas unable to keep the upward trend of reporting net profits as the two SOEs reported net loss in the second quarter? That's the question I want to pose, Chair. And also make a comment, Chair, that the economy of South Africa depends on the functionality and the profitability of the SOEs. If you are before your television screen, you will see that the economy has contracted with 1.3. So we need these SOEs to pull up their socks and bring in the needed revenue to boost up the economy. Thank you very much, Chair.
Okay, Sal, let me give it to you.
Thank you, Chair. Thank you, Honorable Member. The two questions, I think, why SAF and iGas unable to, hold on to delivering profits. Honorable Member, remember from the presentation, one of the issues that we raised is that, we had to incur the cost, both between, iGas, and therefore it obviously migrates to SAF regarding the acquisition of Romco. And those costs, the initial plan was that they will be capitalized, but, they came in as op costs instead of, CAPEX. Hence, they reported a loss. Also, the normal process is that I just get dividends from ROMCO. So you may see in one quarter that the dividends have not come through, and therefore that income is not reported, and then it comes through the following quarter. So that's just how the structure of that business is actually standing. The performance of the SOEs, absolutely honorable member. Hence, if you look at our strategy and what we have been seized with in the last 3 years, it's actually to turn this business around to make sure that they work. And I think within the group, we've actually started seeing, some of the projects which would redefine where the revenue comes from and the performance. And more importantly for the SAF group, security of supply. If I were to just highlight few, as we said, AE has always been, one mine and one customer. And part of their strategy now is actually to look at different commodities in mining and also diversification of customer base. And they're looking at Klipporki as an example, is one mine that will actually have export grades, which actually diversify that from being way too Eskom dependent. At PetroSA, we spoke a lot about the war room. We also spoke about the possibility of attracting partners, especially around the refinery. And that's part of actually shaping the turnaround plan going forward. And the SFF, we used to be, also one location, one customer. And in the last, 2 years or so, we have actually started investing in finished product infrastructure to make sure that we diversify that. So I think we've got a good plan, and I think, honorable member, the most important thing is going to be the focus around the execution of that plan to make sure that we deliver. And we believe that as we look at integration, we'll also be able to flush out some of the stranded costs to make sure that we don't duplicate effort and we deliver on those projects. And with that, Chair, I'll pause there and I'll revert back to the chairperson. Thank you, Chair.
Chair, I'm not sure if Honorable Malinga would still like to get better clarification on SAPREF, and perhaps I should ask Dr. Mukoka to just talk to his response as far as that question is concerned. Dr. Mukoka.
Thank you very much, Chair. I think I did type the response, Chair, on the chat, but the preference, Chair, from SAF is the one of the original transaction, which actually had a list of divestment assets, including the refinery itself and other pipeline and associated infrastructure that made the blended margin to make sense from the standpoint of refining and also balancing that out with some importation. I mean, that's the numbers and the model and scenarios that we ran that actually made the original deal to work. So sorry, Chair. So SAF still prefers that. All that we were saying was that if you have an event that if you had signed an SPA and you had not closed, would have naturally fallen under the MEC clause, then you would have invoked that MEC clause to say natural disaster covered under the MEC clause has occurred, changing the significantly changing the nature of the asset that I agreed to purchase. Excuse me, Chair. So what we're having now was some form of, you can look at it in the form of a revisionary MAC clause where even before you close, I mean, we really were very, very close to sealing the deal before the flood happened. So what that then does is that it introduces a negative value consideration that can make you whole in a transaction that you were looking at the original scope of the transaction. So that's the long and short of it, Chair, and that's where the I guess the sticky point for the negotiating team from both sides arises. Thank you, Chair. I hope I've answered the question.
Thanks very much, Dr. Mukoka. I think it's really the value that you initially, when you responded initially, were trying to highlight that it's really the difference around the values. Honorable Chair, may I please hand back to you again? Thank you.
Okay, thank you very much, Chairperson of SAF and your team. Obviously, probably it may not be the last time we are meeting. Hopefully, as we move towards wrapping up the year, we will be able to have attended to some of those issues. And yes, next week we will be dealing with the issues that relate to that merger itself. I think, let me say for now, from where I stand, I guess it's a sign of good things that finally been able to go ahead from the from cabinet. That is quite thankful. But before then I go to the next item, can I get your last words, Chair of SAF, because I know that, yeah.
Honorable Chair and honorable members, again, thank you very much for the opportunity that you have afforded us to share with you the performance reports for the 3 quarters. As I also said, we are focusing the team to look at the, getting to the end of the line. And just coincidentally, yesterday when we had the war room with the PetroSA team, we did say that, it is not time for them to run to the end of the finish line. They actually need to fly to the end of the finish line so that they are able to achieve the goals that we have that have been set for them. It goes the same for the whole group. We need to fly to the end of the finish line to make sure that the KPIs that have been set and accepted and approved by the DMRE are actually achieved. So we will make sure that from the board's perspectives, we continue with our oversight role. We stay closer to the team, especially now that we are getting to the end of the financial year. We want to make sure that we really improve in terms of the delivery of the compact as has been signed and agreed with the DMRE. So, Chair, I'm going to really just give or leave the committee with that commitment that we continue to make sure that the whole family of SAF is doing their best to perform and also support one another, which is a very important element in making sure that all of us rise and we don't leave anyone behind. So again, we thank you as a committee for affording the opportunity and also for asking the tough questions that you ask, because it also addresses our own scotomas as we, as a board, sometimes we have our own blind spots. So we appreciate this opportunity, Chair, and thank you very much. We will see you next week with the merger feedback. And as I've already indicated, the approval has been received. We just need to outline what it is that we are doing now to make sure that we implement on the measure that has been approved and long awaited. Thank you very much, Honorable Chair, and thank you very much as well to the honorable members and to the team that has presented today, and also to our ultimate shareholder, the DMRE. Thank you.
Okay, thank you, Voorzitter. Honorable members, Gary, can we go to the correspondence? Can I just to flag so that we see if the committee agrees with me, then that will be fine. There is a letter that we have received again from Makua Amoa on issues that now the accusation has changed into a misrepresentation of issues. Because the letter is long and I've got no intentions to maybe first I must check procedurally whether is it something that we can discuss now, or we forward that correspondence to members, and if it needs be, we then deal with that letter probably later on at an appropriate time. Maybe I must get guidance from the committee staff. Will we be doing service if we deal with it now, or we allow members to go and read and familiarize themselves, and then at the appropriate time we then have a discussion on the contents of the letter?
Option number 2, Chair. I think let's forward the correspondence through to members. Let members familiarize themselves with the content of the letter, and then we can schedule a follow-up meeting with regard to the discussed.
Can we do that, honorable members?
Okay.
Agreed, Chair.
Thank you very much. Thank you very much. Please just familiarize yourself, honorable members. This is not my committee. This is a committee of the National Assembly that is represented by all members identified to be part of this committee. So when some things are pointing, they're not pointing, don't want to take them and be personal, take them as if they refer to me. I'm part of the committee and I'm part of the decisions of the committee. So I want you to go through that letter and then see how we all collectively agree now on how to handle it. On that note, is there any other one, Ari?
No, just to indicate, Chair, that our next meeting, as we've indicated during this meeting, is next week, Tuesday, the 14th of March, Chair. That's it, Chair.
Okay, but being the case as it may, honorable members, we think somewhere there was an error. If you allow us, we will go back with the committee staff just to rectify that and see what do we do. I've been alerted that in some of the dates that we included there are dates that coincide with the oversight. So if members just bear with us when we come back, we may just have to reschedule some of those arrangements of those items, but they will never fall off the desk. They will still be part of the program. On that note, honorable members, allow me to declare the meeting adjourned until next week, Tuesday, ne?
14 March, correct, Chair.
Thank you very much, honorable members. The meeting stands adjourned.